Welcome back, everyone. This is Thomas Triple T Ty with another new bullish crypto analysis. Before we dig in and take a look at the weekly chart for Bitcoin, remember this is for edutainment only and not to be considered as financial advice. Additionally, I would appreciate it if you could help spread my easy to understand analysis to help others to make more informed decisions. And you can do that by smashing the like, ringing my bell, hitting subscribe, or leaving comments or questions in the comment section. So with that, by the way, I'm gonna go going forward starting today for Bitcoin, instead of analyzing the weekly chart only on Sundays and then doing the daily charts on the weekdays and Saturdays, I'm going to do the weekly chart every day. That way we have a consistent chart to look at, and it'll be easier, in my opinion. Because for Bitcoin, the movements are, I believe, a longer time frame, and the weekly it's decent enough to look at on a regular basis. So let me know what you think in the comment section. All right, let's dive in and take a look at the news first, and then we'll take a look at the analysis. Let me get my mouse highlighter on here. All right, here we go. According to Bitcoinist.com, as Bitcoin mining difficulty hits 5% all-time high, majority of miners shift to Ethereum. That's interesting. So the tougher it is to mine Bitcoin, and especially when the price is dropping, and for like the old S9 miners, they, cost can get up to about $28,000 to mine one Bitcoin. The newer ones, the newer machines, they can mine Bitcoin for roughly around $5,000 to $6,000. So when these miners have old machines, they can take it actually might cost them more to run them than just to mine something else. So it's interesting. Here you can see the mining profitability, which is the solid line here. You notice how it tanks down as the Bitcoin hash rate goes up, the dashed line here. See that? Hash rate goes up, mining profitability drops down. So let's go to the next news article. And Bitcoin whale Michael Saylor tries to defuse fear over MicroStrategy's margin call, and this is according to Fortune. Michael says that there's plenty of collateral, more collateral it can still pledge to meet its loan covenants without having to resort to a fire sale of crypto. The reason why this is important is because MicroStrategy bought Bitcoin, a bunch of Bitcoin at a certain price, and I'm not sure we have the average price listed in this article. I don't think so. Yeah. Anyways, I'm not gonna search for it, but the average price for MicroStrategy's Bitcoins is at a certain amount, and so. And they took some of those Bitcoins, a loan out, using those Bitcoins, some of those Bitcoins as collateral. So when you take out a loan, there's a loan to value ratio. And so if the price of Bitcoin drops below a certain amount, I think it was in the low 20s or something like that, and then there's going to be a margin call. A margin call is like where the bank who gave the loan, they will say, hey, we need more deposit collateral to be able to sustain this, because the value of the Bitcoin collaterals have dropped. And so, and the concern is that they might need to sell some of their Bitcoins to be able to meet the calls, either deposit cash or more Bitcoins. And that's what the concerns are. But basically, Michael is saying that there's plenty of Bitcoin to put towards the collateral reserve to be able to not get for the margin calls to be of concern. And if And some people think that if they sell, that's going to put pressure on Bitcoin to drop even more. So, and this article here, this next one is from Cointelegraph. Bitcoin kisses 24K realized price after second highest seller losses in history. And this one right here, I couldn't find, they use this chart here. And this chart showed, right here, it shows 24, the wick down on 24 on TradingView using Binance. But from my charts, KuCoins dropped it to a low of 25.3, and I believe another one dropped to 25.6. But yeah, I didn't. But then again, it could have happened because that night Bitcoin varied between roughly about $1,000, give or take some, between various exchanges, and due to Terra Luna's UST and the Luna just crashing. And here's the chart from Glassnode showing the realized price and the actual price. So it's dropping close to it, and it's easy to see right here under the realized losses. You can see here whenever the purple realized losses spike all the way up, price drops down. But look at this. So here there is a spike on realized losses. Bitcoin price dropped to its bottom here. But watch what happens here. Here's a spike in Bitcoin realized losses. Bitcoin crashed down, but it didn't hit bottom yet. It's after this second spike. Then following that, it hit its bottom. And so now we have this big spike. Some people think, oh yeah, the bottom's in. No, I would be careful about that. I would wait a little bit and see if we get another spike back here, then a bottom, and then going to the top. But this year is so different because of the macro environment. Back here in July 2021, we don't have the macro environment factors that we have today. So it'll be an interesting next 6 months. I'm going to skip the rest of it. Here we have the crypto market heat map. Bitcoin 29.4K down 4.42 on the 24-hour. Dominance is 44.23. Ethereum around roughly 2K, down 4.16 in the 24 hours. And dominance 19.42. So it's returned back to pretty blood red. Earlier in the day, it was pretty green, nicely green. But 24 hours can change. Here's the crypto market cap. We are down for 3.82 here at $1.27 trillion in the market cap, total market cap. Bitcoin's market cap, $559.9 billion. It's I just look at this and I think we're still better than where we were that night when we had that major crash. So we'll take a look at that in a few minutes here. Whoa, pretty busy there. Let's get rid of some of this stuff. So here's the weekly chart on TradingView. And I last did this 2 days ago. I skipped yesterday. I was taking a break. But again, going forward, I'm going to use the weekly chart only because it's easier to follow. So let's magnify this up a little bit. Here we go. So in my last weekly charts analysis, I said that the path would likely break down below some of these support levels here. The 29K. The descending wedge, and then more likely it'll drop to the 25K zone. It pretty much did that, so that's cool. And I gave that last previous chart, I gave it 3 bears. So that was kind of pretty good prediction, huh? So Bitcoin basically dropped down to 25.3 on KuCoin, 26.6 on Bitfinex, and according to the other story there, it dropped down to about 24K on Binance. So here, Bitcoin remains in the bearish zone under the bull market support band here, this gray ribbon here, and that is around, it has a range between 40K and 40.9K, and it's all Bitcoin's currently also under the 50-day descending indicator, the 50-week moving average, sorry, and that 50-week moving average is roughly around 44.6K right in this area here. Additionally, the current candle, it did crush the bottom of the Bollinger Band, and that bottom, the Bollinger Band, is at 31.7K, which signals oversold. It crushed it, went down to pass the descending wedge support here, line here, and then it went towards the 25K line here, and then it pulled back up just above the 29K level. Now it's at 29.5K. You can see down here the 200-week moving average line is rising sharply here. So sooner or later, it might meet. And if it goes below the 200-week moving average, that is very bearish. But we'll see. It's closer to the 200-week moving average than it is to the 50-day moving average. So something to keep an eye on. The nearest resistance zone is the the nearest major support zone would be this 29K to the descending wedge support here, and that is roughly 27.3. So between 29 and 27.3, that's where the support zone is. And the resistance would be at 30 to 32K in this zone up here, where you have the bottom support of the descending triangle. Right here, here's the triangle. Here's the side down. Here's the bottom of the triangle. And between that and this red line here, that will be the support, the resistance zone, 30 to 32K. The volume profile for this zone is currently this bar right here. So this reddish and gray histogram bars on the side, on the right side here, and these are the volume profile. And right now it's just in this area right here, which is minimal volume at this price range, going back all the way to July of 2020. However, if you go up one level right here, this level right here around 31K, 30 to 31K, and that level is mid volume for this range going back to July 2020. So big discrepancy there. And one level below, it's even smaller. So, all right, let's go down and take a look at the daily volume. This one is interesting. Daily volume, as you can see, it far more than double the moving average, and it hasn't done that in a long time. Going back to the week of May 17th and June 21st of 2021. Here we had a major capitulation. Look at that candle. Look at that bar, volume bar here, and that volume bar was 204. This volume bar here for June 21st is, what is that? It's 151, and the current one here is 106. So it's tough, you know. It's, if we go back further and you look at some of these volume bars here for major capitulations, this volume bar is what, 304. This volume bar here is 434. Some of these here, 575, and this is like 559 and so on and so forth. So yeah, it looks big, but if you compare it to previous major capitulation events, 104, it's not quite there. It's still on the low end. So it's hard to say. I wouldn't call it a capitulation event, although it could be a small one, but not. I'm expecting something like this, at least over 200. Because I believe that's over 200. Let me double check. Yeah, yeah, it's dark red and black color. So, yeah, at least 200. So we're not quite there, in my opinion. So let's look at the indicators down below. Let's start with the KDJ. The white J line of the KDJ is at, or was at -5, and it flipped back up from the lowest level in this whole range, going back to August of 2020. So hit the lowest range in that area, and then flipped slightly back up to -5, and yeah, so I gave it a crab, and so it's we'll see. We need to wait a couple days and see what happens here, but it's still in the bottom zone for the KDJ, and bottom zone starts at 20. Let's go down to the MACD here. The white MACD line trended down to -3060 under the red signal line, putting in the it's still the fourth bearish histogram bar that's growing slightly larger than the previous one. I gave that a bear. For the red RSI line, the white mom indicator, and here's the red RSI line, white mom, and the blue CVD lines, they all continue to trend down, but they did pull back a little bit from the previous day. And the red RSI line is at 34. I gave that a bear. And 34 is just above the start of the bottom oversold range, which starts at 30. The blue CVD line is at 3.924 million, and I gave that a bear also. And as far as the range, is still in its probably in the middle of its range if you count the highest to the lowest range, lowest and highest up here. I gave that a bear. Wait a minute, this is not right. The spot to derivative, hang on, I think it didn't copy the right things here. So the spot to derivatives is this one. And the this one doesn't have. Here we go. Now it's more correct. So RSI is at 34. That's a bear. Blue CVD is at 3.924. That's a bear. Million, that is. That's a bear. The white mom line is at -8,987, and that's a bear too. So down here, the what's interesting about this indicator down here is that it's still bearish down here at the spot to derivatives basis delta, but it pulled up slightly to -0.00030, 0.00027% for still 6 weeks in a row. But notice that it's curving up. Let me magnify this up so you can see. Notice how it's curving up though. You see that? So whenever it flips to the upside here, and that is when we get these rallies. See that? So when it, well, you can't see it here, but here you see that it went to the upper zone, and look at the rally. So it's curving back up. So that's interesting. Even on the downward pressure here, strong downward pressure, is curving up. So it's something to keep in mind there. Let me save this before it changes some more here. There we go. Ah. All right, let's see. Let's go through the options. Here, we don't want to see this yet. Let's go with this one first. So options, max pain. And for those who don't know, max pain is a magnet for Bitcoin's price to move towards when in most normal situations. So here, and it depends on open interest that's pending too. So let's take a look at some max pain. We have 30K for the 14th. And we have 30K for the 15th, 33K for the 20th, and 36K for the 27th. Notice the price going up. But these can change the next day. So for now, in the near term, we're looking at 30K max pain. And so let's take a look at, ooh. Okay. So here you can see the volume, BTC options volume chart by expiration here. Volume are contracts that have been filled already, and open interest are contracts that are still pending. So for the contracts that have been filled already, you can see in the next several periods here, from the 14th to the 27th, we have more put option contracts that have been filled already than the calls. And puts are option contracts and that allow the holder to sell, the option to sell, but not the obligation. So in this case, they sold already and it's registered here. So there are more people selling. There are more people filling their contracts to sell, so they sold. And it's good because, you know, if they can sell at a higher price when the price is dipping, all the more power to them, right? But if you look at the contracts that are still open, as shown in the open interest by expiration here, the next few periods, we have very low number of contracts still available. So when you see this, max pain may not go towards that direction because there's not strong enough of a magnet to pull it. For the heat map, the bookmap heat system, for some reason the aggregate heat map is not working. It's blank, and so I had to use I resorted to using the heat map from Binance alone. And so here you can see it's not as crowded, but it gives relatively the same levels. We have a level. Here's the current price. Not any. There's no major sell walls above, but we have buy walls on the bottom. You see here one at 29, and then two stacked ones, roughly around 28 and 28, just below 28.5. So between 28 and 28.3, roughly. You got smaller ones at 27.5, 27, but bigger ones at 26, and major one at 25. 24 and 20. So some buy walls to keep in mind, especially the 25K wall. So sometimes when you have what seems like a capitulation event, multiple weeks later, it retests that area. So more than likely we could retest the 25K. So be prepared for that. If you want to front run it, again, not financial advice. If you want to front run it, add a couple hundreds to the 25K zone. So that reminds me, I should go through the non-financial advice entry levels. They remain the same. And we got 26.2K, 20% of the budget, 25K, the sweet spot, put 40%, 22K, 20%, 20K, 20%. So previously, if these entry levels were used, these would have been, the 26.2K would have been filled already. And those who add a couple hundred to the 25K level would have been filled already too. So And that's why you always want to front run some of these walls. For the liquidations level map from High Block Capital here, we see that on Binance for 20 to 100x high leverage liquidation levels, we see that there's a difference of negative 5.2, make it $5.3 billion. And what this means is that if you take we have more long levels coming in here, and we have short levels up here. So you take all the short level, the money in the short levels up here, and you minus the money in the long levels here, then what you end up with is the difference, and that difference is $5.3 billion just for 20 to 100x leverage. And what does this mean? That means this, we just have more. Not only do we have more short levels, but the money in these levels are more bearish. So people are thinking it's going to go further from where it is at now. So that's what they're betting. And the difference is not big enough. Usually, like I mentioned before, where you saw like, what is it, $17 billion, that's when it made a difference. So it was back right around, I believe, May 13th, somewhere right around here. And then we had this move up, and then it wiped out a bunch of liquidations out. I think back here was when we had around $17 billion. Don't quote me on that. It's in my previous analysis. Feel free to check that out. But yeah, it moved up, wiped up a bunch of shorts, and then this is where we are. And I believe that takes us back to the beginning. I appreciate your time. Thank you so much for joining me. And please help spread my easy to understand analysis to others so that they can make more informed decisions instead of FOMOing in or wondering where they need to go and just do things by blindly or guessing. Not a good strategy. So you can do that by smashing the like, ringing my bell, hitting subscribe, and share your thoughts and comments in the section in the comment section on YouTube or on my Twitter account. I will see you in the next video. Let's see what time it is. Oh, it's almost midnight. I'm not sure if I'm going to be able to do another one. I want to do one for Phantom because it's Friday, but I'm really tired. So if I don't do it, I'll see you in the next video tomorrow. But if I do, I'll see you in that one. Peace.